Hey everyone, welcome back to Talk Tickers. Today we're going to be diving into LGI Homes' Q4 2024 earnings call.
Yeah, this should be fun.
It's going to be a wild ride.
Buckle up.
We're talking affordability crunches, record-breaking community counts, and some strategic moves that might have you rethinking your entire investment portfolio.
It's pretty amazing to see how LGI navigated, this crazy year in the housing market. 2024 was a roller coaster for a lot of home builders.
Yeah, it was.
I mean, interest rates went crazy, affordability plummeted. Everybody was kind of bracing for, a major economic storm.
Yeah, and yet LGI not only weathered the storm,
Right.
but they thrived in some aspects.
Yeah.
They boosted their gross margins, expanded their community count, and even beat their initial guidance for full-year margins.
Yeah.
Hit a record-breaking average selling price, too.
It's impressive.
Pretty impressive considering the circumstances.
Absolutely. It highlights their resilience and strategic decision-making. What's really interesting to me is how they're balancing profitability with affordability.
Yeah.
Like they're offering incentives like closing cost assistance, interest rate buy-downs
Right on.
to attract buyers in this tough market.
So let's break down the numbers.
Yeah, let's do it.
Revenue for Q4 came in at $557.4 million.
Okay.
That's down 8.4% year over year.
All right.
But there's a little asterisk there.
Okay.
Part of that dip is because of a bulk sale of leased homes they had in Houston.
Right. And even with that factored in, it's clear that they're not immune to the slowdown.
Yeah.
But their average selling price actually jumped up 5.1% to $363,598.
Wow.
What does that tell you?
It says to me that they're being really smart about where they're building,
Right.
what types of homes they're offering.
Yeah.
They're zeroing in on homes that meet a very specific demand,
Right.
even in a challenging environment.
Yeah.
Not just building anything, but building what people actually want and can afford.
Exactly. And that focus seems to be paying off. They closed 1,636 homes during the quarter, including that bulk sale we mentioned.
Right.
Their top performing markets were Charlotte,
Okay.
Las Vegas, Washington, D.C., Raleigh, and Tampa.
That's a pretty good spread geographically.
Yeah,
Does that suggest that their strategy is adaptable to different regional markets?
absolutely. It seems like their approach can succeed in a variety of economic conditions, which
Yeah.
is a good sign.
Good for investors.
Yeah.
Now let's talk about something that really caught my eye.
Okay.
Community Growth LGI added 80 new communities in 2024,
Wow.
ending the year with a record-breaking 151 active communities.
That's a big jump.
That's a 29% increase year over year.
Yeah.
Talk about bold moves in a shaky market.
It's a clear signal that they're incredibly confident in the long-term demand
Yeah.
for affordable entry-level homes.
Right.
It's not just a random land grab.
Right.
They're strategically choosing areas with strong job growth, steady flow of new residents.
So they're not just betting on the housing market. They're betting on specific locations that are poised for growth.
Exactly.
That makes sense to me.
Yeah.
Now, what about profitability?
Okay.
They're offering all these incentives.
Right.
The market's slowing down.
Yeah.
How are they managing to stay in the black?
Well, despite all that, their full-year gross margin actually increased by 120 basis points to 24.2%.
Okay.
And for those who aren't familiar with the term basis points,
Yeah, break that down for us.
think of it as a way of measuring changes in percentages.
Got it.
So a 100 basis point increase is equal to a 1% increase.
Okay.
So 120, pretty significant.
Significant increase, but how are they pulling this off?
It comes down to operational efficiency.
Okay.
They're managing costs, effectively streamlining construction processes, making smart decisions about where they acquire land.
It's like a well-oiled machine, even under pressure.
Exactly.
Okay, now for the question on everyone's mind, what's LGI's outlook for 2025?
Right.
Are they expecting sunshine and rainbows or more turbulence ahead?
Well, they're forecasting a bit of a slower start to the year,
Okay.
which is understandable,
Yeah.
given the economic uncertainties.
Yeah.
They're projecting between 6,200 and 7,000 home closings for the full year,
Okay.
with an average selling price between $360,000 and $370,000.
So it seems like they're sticking to their focus on affordability,
Yeah,
even if it means slightly fewer homes sold.
right.
Smart move, in my opinion.
Yeah, I agree.
But what are analysts saying about all this?
Oh,
Are they on board with LGI's approach?
they're definitely keeping a close eye on things,
Okay.
especially when it comes to rising costs and their potential impact on LGI's margins.
Makes sense.
They're also wondering about the pace of community count growth,
Yeah.
whether such rapid expansion could backfire.
If the market takes a turn,
Exactly.
those are some valid points.
Yeah.
It'll be interesting to see how LGI addresses these concerns in the coming months.
Yeah, for sure.
So far, they've proven to be adaptable and resilient, but this year will definitely put their skills to the test.
Absolutely.
Now let's jump into the Q&A portion of the earnings call,
Yeah.
where analysts got to grill LGI's leadership with some tough questions.
Right. And the very first thing they zeroed in on was, you guessed it, gross margins.
Of course.
They wanted to know how LGI plans to maintain profitability if costs for land, labor, and materials continue to rise,
Valid concern.
especially with all the uncertainty in the economy.
So how did LGI respond to that?
Well, they emphasize that a significant portion of their communities are self-developed projects.
Okay.
This means they're capturing developer profits,
Right.
which gives them a little bit of a buffer,
Yeah.
even if they need to offer more incentives to buyers.
That's a pretty savvy strategy.
Yeah,
It allows them to stay competitive on pricing without sacrificing their bottom line.
exactly.
What else were the analysts digging into?
Well, there were some concerns about the impact of layoffs in the Washington, D.C. area. But LGI assured analysts that their D.C. market is less reliant on government workers
Okay.
and more focused on the surrounding suburban areas.
So they've got some diversification built in.
Yeah,
Which helps mitigate risk
exactly.
if one sector takes a hit.
Right.
What about attracting those multifamily renters?
Yeah, good question.
The folks who are increasingly priced out of the traditional housing market.
Right.
What's LGI's game plan there?
They stress their commitment to offering the most affordable product,
Okay.
using a combination of attractive base pricing and those targeted incentives we talked about earlier
Right.
to close the gap between rent payments and mortgage payments.
So basically they're trying to make home ownership more attainable
Yeah,
for folks who might think it's out of reach.
exactly.
That's a pretty crucial demographic to target right now.
It is.
So I'm guessing analysts also had some questions about that rapid community count growth, right?
Oh, absolutely.
I mean, it's bold, but is it too much too soon?
Analysts were wondering if LGI might be biting off more than they can chew,
Right.
especially in a potentially softening market.
Yeah.
But LGI countered by highlighting the long-term nature of their strategy.
Okay.
They believe that by establishing a strong presence in these key growth markets now,
Right.
they'll be in a prime position to capitalize.
When the market bounces back.
Exactly.
So they're playing the long game.
They are.
Interesting. What I'm hearing is a company that's ambitious,
Yeah,
but not reckless.
I agree.
They're
Yeah.
taking calculated risks,
Uh-huh.
but they're also aware of the potential downsides.
Right.
What do you think is this a company worth keeping an eye on?
Without a doubt, LGI is definitely one to watch.
Right.
They're walking a tightrope, but so far they're doing it with impressive balance.
Right.
But remember, this is just one piece of the puzzle.
Right.
We need to consider the bigger picture of the housing market and the broader economy
Of course.
before making any investment decisions.
Absolutely. Now, before we move on, I want to address a question that's probably on everyone's mind.
Okay.
How does all of this translate to your personal investment strategy?
Yay.
What can you as a listener take away from all this information?
That's the key question, isn't it?
Right. We don't want to just leave you hanging with a bunch of data points.
Yeah.
We want to help you connect the dots
Right.
and see how this could potentially impact your own portfolio.
For sure.
So stay tuned, because in the next segment, we're going to dive deeper into LGI's financials,
Okay.
their land strategy,
Right.
and even explore some hypothetical trade ideas.
Sounds good. And just a reminder, this is not financial advice.
Of course.
We're just having a conversation, sharing our thoughts. But
Mhm.
ultimately, you need to do your own research
Yes.
and consult with a financial advisor
Always.
before making any investment decisions.
Exactly. So grab your coffee, get comfy, and get ready for part 2 of our deep dive into LGI Homes.
We'll be right back. All right, so let's get back into it and dissect some of those key financial figures from LGI's report.
Okay, sounds good.
They wrapped up 2024 with a total revenue of $2.2 billion.
Okay, so that's down 6.6% from the previous year.
Right.
But we have to remember the housing market was a bit of a battlefield last year.
Exactly. It's important to keep that context in mind.
Right.
Now, their average selling price for the full year was $365,394, which is up 4.2% year over year.
Okay.
This shows they're not just throwing up any houses.
Right.
They're focusing on homes with features
Yeah.
and in locations that people are willing to pay a premium for.
It's that sweet spot, right?
Yeah,
balancing affordability with desirable features.
Exactly.
They're still catering to that entry-level buyer.
You got it. And when we look at their margins,
Right.
we see they ended the year with a gross margin of 24.2% and an adjusted gross margin of 26.3%.
Okay.
Both of these numbers are significantly higher than the previous year.
That's a pretty clear indicator that they're managing costs effectively and running a tight ship,
Absolutely.
even with inflation breathing down everyone's necks.
Now let's switch gears and talk about LGI's land strategy,
Okay.
because this plays a crucial role in their long-term growth plans.
Right.
At the end of 2024, they owned and controlled a total of 7,899 lots.
Okay, so that's slightly down from the previous year.
Right.
But hold on, didn't they also say they increased their controlled lots by 11.6% year over year?
You're sharp. They ended the year with a total of 17,582 lots under their control.
Okay.
It's a strategic move that gives them more flexibility in terms of when and where they build, allowing them to respond to shifts in demand and market conditions.
I like that analogy.
Yeah.
Having a well-stocked pantry,
Right.
you've got options, and you're not forced to make rash decisions when things get tight.
Precisely. And it's not just about hoarding land.
Right.
They're strategically acquiring lots in those high-growth areas with strong demographics, the places that are likely to attract buyers for years to come.
It's like they're building a fortress for the future.
Yeah.
They're not just trying to win the next quarter. They're setting themselves up for success over the next decade.
Exactly.
But a strong land strategy is just one part of the equation, right?
Right?
What about their overall financial health?
That's a great point. Let's take a look at their capital position.
Okay.
LGI ended the year with nearly $1.5 billion of debt outstanding.
Whoa, that sounds like a lot.
It might seem that way at first glance,
Yeah.
but their debt-to-capital ratio was a reasonable 42.1%.
Okay.
To put it simply, this ratio measures how much debt a company is using to finance its assets.
Got it.
A lower ratio generally means a company is less risky.
Okay, so that's a good sign. What about their cash on hand?
Right.
Do they have enough to keep the lights on and weather any potential storms?
They ended the year with over $323 million in total liquidity.
Okay.
Think of it as a rainy day fund for the business, giving them the flexibility to navigate short-term market fluctuations
Yeah.
and continue investing in their growth strategy.
That makes me feel better.
Yeah,
It's like knowing they've got a spare tire in the trunk just in case.
exactly.
But even with a solid financial foundation, they can't ignore the elephant in the room.
Right.
Affordability.
You hit the nail on the head.
Yeah.
LGI knows that this is a major hurdle, especially for those first-time home buyers
Right.
who are trying to get their foot in the door.
Yeah.
Interest rates are up. Home prices are still high in many markets.
Right.
And buyers are feeling the squeeze.
So what are they doing to address this?
Yeah, are they just crossing their fingers and hoping for the best?
Right. Or do they have a plan of attack?
They're definitely not sitting idly by.
Oh,
They're offering a whole suite of incentives to make their homes more accessible.
like what?
We're talking closing cost assistance, interest rate buy-downs, and even price reductions in certain neighborhoods.
Wow. So they're pulling out all the stops.
They are.
It sounds like they're going above and beyond to attract buyers.
Yeah.
But are these incentives actually working?
That's the million-dollar question.
Right.
It's something analysts were keen to understand as well.
Well,
They were curious about the effectiveness of mortgage buy-downs in this environment.
right, because buy-downs can help lower those monthly payments,
Exactly.
making homes more affordable.
Yeah,
But they also come at a cost to the builder.
exactly. And LGI emphasized that they're carefully analyzing the return on investment for each buy-down,
Okay.
making sure they're striking that balance
Right.
between attracting buyers and maintaining their profitability.
So they're being strategic about it, not just throwing money at the problem.
Right.
They're using data and market insights to make informed decisions.
Exactly.
Now let's shift gears for a moment and talk about a topic that came up during the analyst Q&A.
Okay.
It's a fascinating one. The potential shift in home design trends.
Oh, yes. This is where things get interesting. As affordability concerns continue to mount, we might see a move towards smaller, more efficient homes.
Okay, so not tiny homes or micro apartments, but something in between.
Exactly. Think thoughtfully designed spaces that maximize functionality
Okay.
and minimize wasted square footage.
Yeah,
It's about making the most of every square inch without sacrificing comfort or style.
that makes a lot of sense.
Yeah.
People are looking for value and practicality, especially in today's market.
Right.
But how does this trend play into LGI's strategy?
Well, for builders like LGI who cater to that entry-level buyer,
Yeah.
this could be a huge opportunity.
Okay.
They could become leaders in designing and building homes that are both affordable
Uh,
and appealing to a new generation of buyers.
it's all about adapting to the changing needs and preferences of the market.
Right.
And it seems like LGI is already thinking ahead and positioning themselves for this potential shift.
Yeah, they are.
Now, before we get to our This Is Not Financial Advice segment, I want to touch on one more point that came up during the analyst Q&A.
Right.
They were curious about how LGI was navigating the current labor market,
Yeah.
especially with those layoffs we mentioned earlier.
Right. That was a key concern.
Yeah.
But LGI reassured analysts that they have a diverse workforce
Okay.
and aren't overly reliant on any one particular industry or sector.
So they've got some built-in protection against job losses in specific areas.
Exactly.
Okay. I think we've covered a lot of ground here when you say.
Absolutely. We've explored LDI's financials, their land strategy, their approach to affordability,
Yeah.
and even touched on some potential market trends.
And we've even thrown in a speculative trade idea
Yeah.
for those who are feeling adventurous.
But remember, this is not financial advice.
Of course.
Always consult with a financial advisor before making any investment decisions.
You got a safety first, always.
So what kind of crazy out-of-the-box trade idea have you cooked up for us today?
Well, let's say you're feeling super bullish on LGI's community expansion strategy. You believe they're going to outperform their peers, even if the overall housing market takes a dip.
Okay.
But you also want to hedge your bets, just in case things get really wild.
I like where you're going with this.
Okay, what's the plan?
How about a covered call strategy?
Ooh, that sounds risky. I like it. Walk me through it.
You buy LGI stock, betting on their continued success,
Okay.
but then to offset potential losses if the market tanks, you sell call options on the stock.
Okay.
This generates some income that can help cushion the blow if things go south.
So it's like having a backup parachute just in case your main one fails.
Exactly.
But this is definitely a high risk, high reward kind of move, right?
Absolutely. It's not for the faint of heart.
Right.
But with LGI's track record of resilience, it could be a gamble worth considering.
All right, folks, there you have it. A potentially lucrative but definitely risky trade idea.
Yeah.
Remember, this is not financial advice.
Right.
Do your own research. Talk to your financial advisor.
Mm-hmm.
And make sure you understand the ins and outs of options trading before jumping in.
For sure.
Now let's take a quick break and come back for the final part of our LGI deep dive. We're back for the final stretch of our LGI Homes deep dive. We've covered a lot of ground already, but there are a few more nuggets of wisdom to unearth before we wrap up.
You're right. We've only scratched the surface of what makes LGI tick. And remember, this is a company that's not afraid to shake things up and adapt to the ever-changing housing market.
Exactly. So let's dive back into the Q&A portion of the call. Analysts were really curious about LGI's long-term vision.
Yeah, especially in light of those potential shifts in home design trends we talked about earlier.
Right. They were particularly interested in how LGI plans to balance their commitment to affordability with the need to innovate and stay ahead of the curve.
It's a tough balancing act.
How do you keep costs down while still offering homes that are modern, functional, and appealing to buyers?
Right. Well, LGI highlighted their investments in technology and their focus on streamlining construction processes. They're exploring new materials, innovative building techniques, and design elements that can enhance efficiency without breaking the bank.
Sounds like they're embracing that work smarter, not harder philosophy.
Yeah.
But are they just talking the talk, or are they actually walking the walk?
They pointed to some recent pilot projects where they've been experimenting with smaller, more efficient floor plans that still offer the features and functionality that buyers want.
So they're putting their money where their mouth is.
Right.
Which is always a good sign.
Yeah, it is.
One thing that really stood out to me was LGI's emphasis on community engagement.
Yeah.
Creating a sense of place within their development.
They're not just building houses, they're building communities.
Right.
They talked about their commitment to green spaces, parks, walking trails, amenities that foster a sense of connection among residents.
It's smart people want more than just a roof over their heads.
Right.
They want a place where they feel like they belong.
Yeah.
A place where they can connect with their neighbors and build a sense of community.
Exactly. And LGI seems to understand that creating that sense of community adds value to their homes.
Right.
Makes them even more desirable to buyers.
Now, I want to circle back to something we discussed earlier.
Okay.
The potential risks associated with LGI's aggressive community expansion strategy.
Right. It's a bold move, but there are always potential downsides to consider.
Analysts were particularly concerned about the impact of rising interest rates
Yeah.
and the potential for a slowdown in the housing market.
Uh-huh.
They questioned whether LGI's rapid expansion could backfire if demand weakens.
So what was LGI's response to that?
Did they have a contingency plan in place, or were they just hoping for the best?
They emphasized their disciplined approach to land acquisition,
Okay.
their focus on high-growth markets with strong underlying demand.
Mhm.
They also highlighted their financial strength
Yeah.
and their ability to adjust their pace of development
Okay.
if market conditions warrant it.
Sounds like they've done their homework and are prepared to pivot if necessary.
Yeah.
But let's be honest. There's always an element of uncertainty in the market.
Yeah, that's true.
No one has a crystal ball.
But LGI's track record suggests they're pretty good at navigating choppy waters.
Right.
They've weathered storms before, and they seem to have a solid plan in place to weather the current one.
All right, folks, we've covered a ton of information today dissecting LGI Homes' Q4 2024 earnings call from top to bottom.
Yeah, we have.
We've analyzed their financials, their strategy, their risks, and their opportunities.
We even threw in a speculative trade idea for those who are feeling adventurous.
But remember, this is not financial advice.
Right.
Do your own research, talk to your financial advisor, and make informed decisions that align with your investment goals.
Absolutely.
We're just here to provide you with the insights and information you need to make those decisions.
That's right.
Now, if you enjoyed this deep dive into LGI Homes, be sure to subscribe to Talk Tickers so you don't miss our next episode.
Yeah, we'll be back soon.
With another earnings call breakdown, ready to unpack the numbers and help you navigate the world of investing.
Until next time, happy investing.